XRP, once a top performer in the crypto world and a symbol of rapid gains, is now under intense pressure, facing a critical test of investor confidence. As of October 11, 2025, XRP is trading below the crucial $3 mark, a psychological barrier that many believed would hold, but has now been breached. The token is stuck in a tight range between $2.69 and $2.83, reflecting deep market anxiety and a sense of uncertainty that's gripping both retail and institutional investors. Despite boasting a market cap over $160 billion and daily trading volumes above $3.4 billion, the mood has shifted dramatically from optimism to caution as traders reassess their positions. The drop below $3 is more than just a minor setback. It's a warning sign that sellers are gaining control and that the market's faith in XRP's resilience is being tested. The bullish momentum that surged after XRP's partial SEC victory in 2023 has now faded into memory, replaced by a tense standoff between buyers hoping for a rebound and sellers bracing for further declines. Volatility is high, and the atmosphere is thick with speculation. Many are asking whether this is just a temporary dip or the beginning of a much larger correction that could reshape the market. Every price move is scrutinized, with investors poring over charts and news, searching for any clue that might hint at the next direction. Multiple factors, whale activity, technical signals, and a shaky macro environment, are converging to create this precarious moment. Global economic uncertainty, regulatory developments, and sudden shifts in sentiment are all playing a role. For anyone navigating XRP's volatile waters, understanding these forces is crucial. Staying informed and agile has never been more important. The stakes are high, and the next moves, by both the market and XRP's biggest holders, could define the token's future for years to come. The biggest threat to XRP right now? It's not just market volatility or regulatory uncertainty, it's something much more direct and relentless. Relentless selling by whales, major holders offloading $50 million worth of XRP every single day. These aren't small-time traders. We're talking about the largest players in the market, those with the power to move prices with a single transaction. This isn't a one-off event. It's a sustained campaign that's dumped over $1.5 billion in the past month alone. Day after day, the same pattern repeats. Massive amounts of XRP flooding the market, overwhelming any attempts at recovery. The market simply can't absorb this volume, and buyer demand is nowhere near strong enough to counteract it. Liquidity dries up, and the order books thin out, making every new sale push the price even lower. The result? Constant downward pressure, stifling any chance of a rally. Even the smallest uptick is quickly erased by another wave of selling, leaving the price chart in a near-constant state of decline. Whale selling signals a lack of confidence from those with the most at stake. When these major holders decide to exit, it sends a powerful message to the rest of the market. The insiders don't see a turnaround coming anytime soon. For smaller investors, it's a red flag. If the smart money is exiting, optimism dries up fast. Retail traders, already nervous, become even more hesitant, and many choose to cut their losses rather than risk further declines. This daily sell-off is more than a symptom. It's a primary cause of XRP's weakness. It's not just reflecting market sentiment, it's actively shaping it, creating a feedback loop of negativity. The market is locked in a defensive posture, with buyers hesitant to step in. No one wants to catch a falling knife, and so the cycle continues, with each day's sell-off reinforcing the fear. As long as whales keep selling, the expectation of falling prices becomes a self-fulfilling prophecy. The domino effect is real. Panic selling begets more panic selling, and the downward spiral accelerates. The $50 million daily sell-off is the anchor dragging XRP down, making recovery nearly impossible until the selling finally stops. Whale selling doesn't just push prices down, it destabilizes the entire market. Massive daily inflows of XRP create a supply glut, overwhelming buyers and making rallies short-lived. Volatility spikes, with sudden price swings liquidating leveraged traders and scaring off conservative investors. Retail traders, seeing whales exit, often panic sell, accelerating the decline. This herd behavior can quickly turn a controlled drop into a crash. The result eroded support levels, heightened fear, and a market dominated by short-term speculators. Until the selling stops, organic buying can't take root. The market remains fragile, with every negative headline amplifying the pain. Technically, XRP is hanging by a thread. The current price action is teetering on a razor's edge, with every tick watched closely by traders and investors alike. The tension in the market is palpable, as even minor fluctuations can trigger waves of uncertainty. The key support zone, $2.75 to $2.80, has been tested repeatedly and is showing signs of exhaustion. Each time the price dips into this range, buyers step in, but their strength seems to be waning. The more often a support level is tested, the weaker it becomes, and right now, this zone is looking increasingly fragile. Each bounce off this level drains buying power, making a breakdown more likely. The rebounds are getting smaller, and the momentum just isn't there. It's as if the market is running out of steam, and the buyers are losing confidence with every failed attempt to push higher. If this support fails, there's little to catch the price before it drops sharply. The gap below is wide, and there are no significant safety nets until much lower levels. A break here could unleash a wave of selling pressure, accelerating the decline. Analysts warn that a decisive break could trigger a rapid fall, as the next major support is much lower. This scenario could see XRP plunging quickly, with few buyers willing to step in until the price finds a new, more stable floor. The psychological impact of losing this level could spark panic selling. When a widely watched support gives way, fear can spread fast, leading to a cascade of sell orders as traders rush to exit their positions. Buyers face a tough choice: step in and risk catching a falling knife, or wait and risk missing a bottom. The uncertainty is high, and every decision feels like a gamble, with fortunes potentially made or lost in moments. The battle for this narrow range is critical. Its outcome will shape XRP's trajectory. Bulls and bears are locked in a tense standoff, each side waiting for the other to blink first. The next move could set the tone for weeks to come. Right now, the odds favor the bears. The technical signals are pointing downward, and sentiment is turning increasingly negative as the pressure mounts. The market is holding its breath, waiting to see if the dam will break. All eyes are on this crucial level, as the next few sessions could determine the fate of XRP in the near term. XRP's charts are flashing danger. A descending triangle, a classic bearish pattern, has formed, with sellers pressing lower and buyers barely holding the line at $2.75 to $80. This setup usually ends with a breakdown, and the pressure is building. If the pattern plays out, analysts see a drop to $2.20, a 22 to 25% plunge from current levels. Such a move would erase billions in value and could trigger further panic selling. The technicals and fundamentals are aligned. Sellers are in control, and the path of least resistance is down. For traders, this is a clear warning to exercise extreme caution. Ignoring these signals could be costly. The charts are a roadmap, and right now, they point lower. XRP's fate is tied to Bitcoin, the market's bellwether. Bitcoin's recent drop from $124,000 to $111,000 has created a headwind for all altcoins. When Bitcoin falls, altcoins like XRP typically fall harder. History shows they have higher volatility. Even if XRP had no internal issues, Bitcoin's weakness would still drag it down. The double hit of whale selling and a bearish Bitcoin makes recovery nearly impossible for now. As long as Bitcoin struggles, XRP's outlook remains bleak. Altcoins amplify Bitcoin's moves, both up and down. In this environment, XRP is especially vulnerable to sharp corrections. XRP's challenges extend beyond crypto. They're tied to global economics. The Fed's recent rate cut hasn't sparked a rally, as stubborn inflation keeps investors on edge. High inflation limits the Fed's ability to cut rates further, creating uncertainty for all risk assets. In this climate, investors flee speculative bets like XRP for safer havens. The threat of stagflation, slow growth, and high inflation adds to the risk. Upcoming inflation and GDP data could trigger more volatility if they disappoint. Even if whale selling stopped and Bitcoin stabilized, macro headwinds would persist. The market is de-risking, and crypto is no exception. With buyers scarce, negative sentiment dominates. The macro backdrop is another heavy weight on XRP's price. Amid the gloom, some hope for a spot XRP ETF approval in the US, a move that could attract new capital. But ETF speculation is no match for the immediate reality: relentless whale selling and weak demand. Even if approved, An ETF wouldn't solve XRP's short-term problems. Meanwhile, investor sentiment is shifting away from large-cap altcoins like XRP toward newer, riskier projects. Capital is rotating out of XRP, with traders chasing the next big thing. This shift leaves XRP vulnerable, losing both whale and retail support. The ETF dream is a faint light, but the present is dominated by risk aversion. For now, capital preservation trumps speculation. The outlook for XRP is clouded by risk and uncertainty. The immediate test: can it hold the $275 to $280 support zone? A break likely means a plunge to $220. Whale selling remains a powerful force, making rallies short-lived and volatility high. Bitcoin's price action and macroeconomic data will continue to drive sentiment. If Bitcoin keeps falling or inflation stays high, XRP will struggle. The market is in risk-off mode, and sellers have the upper hand. Investors should brace for more downside and manage risk carefully. Staying informed and cautious is key in this environment. The storm is here, and XRP's ability to weather it is uncertain. The next few weeks will be critical for the token's future.